Well, good evening, bienvenidos, greetings and salutations, buenas noches, good to see you. Folks, it's me, it's Danny Deals After Dark. It's a subdued, dressed down show. Think of me as your Andy Cohen, where we critique fashion, music, news of the day, culture, poetry, and we'll also talk a little bit about the SOFI stock. So let me say hello and welcome and hello and once again hello and welcome and hello. I'm very tired. I did not sleep at all Sunday night. I've been dealing with the machine that builds the machine. I've been dealing with the beasts, the things that go bump in the night, different problems. Ranging from the medical establishment to the IRS to the police, all sorts of entanglements, folks. But I'm here. I am fully invested in the market. As always, I do not generally hold cash on the sideline. Um, I have a large investment in the SoFi stock, so I took a great interest in this earnings report, as I'm sure many of you did. And now I've had a chance to read the transcript, look at the numbers to the degree that my pea brain can go ahead and do such things. And I wanted to talk to you guys about what I think is going on, not only the short interest, but also the only thing. What's up, guys? How's it going? Jazor, Keegan, and JBJ. Apologies to my partner in crime on this little turd of a channel, not a lurker. I did not alert him to the show because I thought he would probably be asleep because it's the middle of the night where he's located, and he is a sane, rational person who actually sleeps, unlike me, who's somewhat of an insomniac. Um, Tuning in from Charleston, nice. I was just me and Princess J were on vacation in Charleston last year. Really liked it. We stayed at this gorgeous old hotel right across from the ocean. Oh, it was a lot of fun. Yeah, the SoFi roller coaster, guys. That's what I want to talk to you about. All I ask when you listen to this show is that you just use basic logic and, let history be your guide. History does tend to repeat itself. You don't see somebody, think about in your life. Do you see somebody who you've known for a long time, who's always honest, always trustworthy, always straightforward, and then, one day they just go ahead and, steal your car, make a pass at your wife, it just doesn't happen. People tend to be predictable. Or if you see, say, a CEO who always, or a management team that always under promises and over delivers around the performance of their company, like SoFi has, and then you see sort of these analysts, these snipers that make sort of vague criticisms and accusations that can never really be disproven because they're sort of amorphous, sort of nebulous, sort of, it's like a cloud of vaporized bullshit that they throw at the stock. And, like one day the parrot Michael Perito, let me bring up my tile here. It's the Three Stooges, guys. It's massive borrowing. It's Patrick Swayze killing that other dude in Roadhouse. We've got the parrot with a big poop on his head. We've got the massive five head standing in for Larry. Of course, my office suite located behind that giant Cro-Magnon skull has been just great for me. It's got great bones. We've got the Chia Pet in the middle, depicted by Mo, and then we have Larry as himself. But the parrot is obviously the disembodied head on a parrot, and he's just got that giant poop hat. But here's what I mean by what I'm talking about with management. So, narratives, guys. The narratives aren't really catching on. I think actually SoFi is catching more of a bullish, positive narrative on this earnings report. They're not really changing it. They're just basically doing massive borrowing to sort of crash the stock after it popped. And a lot of people are saying, oh, it's going to come back down to 750. it's going to come back down to 6. Those people just, those people just have shit for brains. They can't interpret what options are doing. They can't interpret even what market makers are trying to do. They're not pushing this down because they were wrong about the last couple of ERs, particularly this one, to cover their short positions. These are bigger fish pushing down to accumulate because they don't want to pay for this stock going forward, and they know institutions are buying in. And in fact, um, so one narrative is that the tech side, like the parrot was putting forth, is that the tech side is going to slow down big in 2024. Well, when you go to the earnings report, this is the SoFi investor presentation, and we can go through also on the transcript and see exactly what Anthony Noto and Crystal Point said. But they're saying that we're going to see 50% growth from 2023 levels, and actually lending is going to be pared back. So that basically kind of if you believe management, and this is all presupposing that you believe management, and management has a very good track record of delivering. They did it again this quarter. That's 10 consecutive quarters where they basically beat what they're going to say. So are you going to listen to them, or are you going to listen to these children, these analysts who don't even understand? They're going to question Chris Lapointe on math. It's like, I was listening to the Stock Goat earlier. He was doing, I think, one of his first live broadcasts. Did an excellent job. He actually read, he actually put up some of my stupid comments, which were kind of funny, but really appreciate that, Kyle. Great effort as you start live broadcasting. I think it's way better. You don't have to mess with anything, and you just say stupid stuff, and it just goes out there, and nobody cares, bro. It's live, man. What are you gonna do? It's live TV. Hey, bro. So anyway, guys, what's up, Min? Yeah, I don't know. I'll go to sleep here in a little bit, but I'm out on the West Coast. So it's not actually too late out here. What's up, PC? Been the pump and dump ride over to, yeah, nothing new. Guys, if you remember, I really had a sneaking suspicion this was gonna pop 20% and then sell off. And that's kind of exactly what it's doing, but here's why I think it's going to come back. And that is, number one, the tech FUD is just not getting through. There was good account growth, but more importantly, it's what management said in the transcript. We'll get to that. Number two, the another huge source of FUD, they're overextended on personal loans. Their loan book is getting too big. Their ratios are getting unwieldy. They have super high defaults incoming, and basically their balance sheet will not support the loan growth. And SoFi is basically kind of flipping that argument on its head and saying, we don't want to grow the loans at breakneck speed. They needed to achieve a certain amount of scale to be a credible bank, to add business banking, to add IPOs. But I think again, this goes back to the guns and butter debate. About growth versus profits. You can't do both full speed. That's why companies that grow ultra fast are generally burning money. And companies that are making, large profit margins, these sort of old guard companies are growing, slowly, if at all. Even like big tech companies that are spinning off a lot of cash, they're generally not growing rapidly. So when you find companies that are spinning off a lot of cash flow and good margins, and they're also growing rapidly, that's the unicorn, you know. So that's the kind of companies you look for. And I mean, that's the kind of company. I know SoFi is not there yet. This is the first dime they've made. You don't, hey, you had your first beer tonight. Doesn't mean you're, Frank Sinatra, for God's sake. But in any case, I just think this earnings report just dismantles brick by brick. And it felt like I said, when Noto was on the earnings call, I was doing the no sleep zombified Danny Deal's earnings call with Tanner, Tevis, Roy, and Chris, data driven investing. Um, and it was a really good show, not necessarily my my contribution, but overall. And what you heard in Noto's voice was just an absolute swagger, knowing that they just completely knocked it out of the park this year. um and you know when you see the trends that SoFi's put together, this management team has not has not really faltered. I mean, what you saw in Q4 is SoFi kind of stop this growth at all costs, members at all costs, spend more and more. I'm I'm assuming customer acquisition costs were in line, membership growth just under 700, I believe it was 585. Yeah, so 44%. Their products grew, again, it was a lot slower. It was back to sort of the Q4, Q1, but the spending was obviously reduced. Galileo is what everybody was looking to. Very good growth there, financial service, but I'm not going to go. You guys can read the investor presentation, but the adjusted net revenue, the 34%, like we haven't seen a jump like this since Q2 to Q3 2022. Things had actually kind of stalled out, guys. Quarterly adjusted EBITDA, um, we just turned positive on that Q1 2022. Um, and then 2040, we had really good growth there, and then we stalled out around that 70 million level for 3 quarters. And that's for various reasons. Saw a really good bump last quarter with the tremendous membership growth last quarter, over 700,000 members. And then this quarter, the EBITDA just absolutely exploded. And if you look down below here, this is very critical. The EBITDA margin actually reached their long-term goal this last quarter in Q4. They reached a 30% EBITDA margin. Look at these margins, guys. Q3 2022, 11%. Next quarter, 16, 16, 16, 18, and 30. I don't know. I don't think it's just a gimmick, but I think going forward, I think the notion that I think even their own guidance is silly. It's silly. I'm a silly little freak. Um, you know, 7 cents? Are you kidding me? And Q1 may be weaker than Q4, but I don't think it's going to be that bad. I mean, even if they break even, and then again, you know, one, two, three in the next, that's really all they're calling for. I mean, it's not going to happen, guys. Look at the growth rates. Look at the numbers. That's just not what I'm seeing. And adjusted net revenue, just outstanding, guys, for a company in this sector. I mean, technology, while it's growing, is not a big meaningful contributor. I mean, it's going to certainly become that, and it's going to be absolutely glorious. But right now, um, they're growing sort of meat and potatoes, lending, banking, etc., and still growing 35%. Management's calling for slowed growth, 25%. But Noto, you can tell in his voice, he's completely, sandbagging that number. And then again, annual adjusted EBITDA just barely turned positive in 2021, up to 143 million in 2022 and 432 million, um, for this year. So, non-GAAP results versus guidance. So, as terms of adjusted net revenue, again, this is non-GAAP. 2.06 billion was the high. They were 2.07, so just edge that out by what would that be, $10 million or whatever it is. So adjusted EBITDA, this is again where it was, adjusted EBITDA margin again. They were calling for 19%. I know that doesn't sound huge, but 2% in terms of margins is a lot. It's a lot. And you see that come in, guidance 386 to 396, and they hit 432. So, they're beating guidance by more than 10%, and they're beating margins by 2%. And those numbers are absolutely critical. Um, so, you don't hear the bears talking about the really important stuff. You hear the bears talking about sort of superficial stuff that's just temporary. It's based on macro trends that might be against SoFi for a certain period, but then when that reversed, it would work in SoFi's favor. And SoFi's built a diversified business model. And, there's a criticism that this year, I guess 80% of the revenue was coming from the lending side, and that's supposed to be 50, that's supposed to come all the way down to 50%. 50% of the revenue should be from financial services and technology as soon as 2024. And those businesses are going to continue to grow, and hopefully lending will continue to, stay there or shrink. Because another thing you see is that, SoFi, one of the criticisms I've heard from, I believe it was actually might have been Five Heads note, but I could go back and see which one of these spineless twits this thing was. Sorry, we're too much stock twits. Keep calling people twits. But anyway, guys. So one of the major criticisms is, oh, they're going to be constrained with how many loans, but strategically, it doesn't make sense for SoFi to make every loan they can. It makes sense for them to tighten up the requirements, actually make less loans. And you hear people constantly complaining, oh, I make $200,000 a year and my credit score is 812, and SoFi, denied me for a personal loan. But that's because their algorithm is actually analyzing people's cash flow. It's actually analyzing things, I think, on a little bit deeper level than just a credit score. But sorry, guys, feeling a little bit of a draft, a little bit of sniffle, but maybe a little bit of sparkling water will get me back on track. But guys, I highly encourage you in any company you invest in. I can't do it for every single company I invest in because it just gets silly. But the ones I have, significant positions in, read the earnings report, listen to the earnings call. You get a lot of feel for management, how they actually are feeling in terms of mood, in terms of outlook, if you actually listen to the call versus just reading the transcript. So I highly encourage, I'm sure you can do that over at SoFi .com/, investor relations. But so just basically, management is telling you tech is going to blow up. And these analysts are telling you tech is going to fizzle and be a complete dud. So, why would management who actually knows the inside of what's going on with these tech customers, with these RFPs? And again, Noto's saying these RFPs and the implementation, the transition to SoFi, this is measured in many, many quarters till those revenues really start coming online. There's many reasons why SoFi is for the patient long-term investor who wants to have massive upside over the long run. People make fun of that. They're like, well, any stock, if you just wait for years, it'll 10x. Like, no, it won't. And this stock may or may not. But, don't be such a smug turd. Don't tell me my business, boy. It's all ball bearings these days. Anyway, guys, I've probably seen Fletch one too many times. Um, that JP Morgan guy sounds like such a douche. Do people really realize how they sound? It's like, do you think do you think they haven't double checked the math on as they come out and talk to the media? Lapointe, dude, these guys are nerds, man. I mean, yes, they're good looking, wealthy people, probably with families. They go to country clubs, they take great vacations, probably have big old SUVs, just way larger than is reasonable. But come on, these guys are nerds at the end of the day. They have a team of nerds down at the Nerdatorium who checks these numbers. And the fucking guy from JP Morgan looks like he just became a counselor for the fucking Boys and Girls Club. Looks like he's got a fucking clip on tie. He's going to tell Chris Lapointe his business. Stay in your lane, son. Stay in your lane, man. Adjusted EBITDA was once again very, very strong. My hair is slightly more gray. I'm a little bit thinner. In fact, I'm actually not doing this call from a golf course, but I am wearing windbreaker at all times in case there is a light breeze. What we expect to deliver. So tech platform and financial services growth 50% more 2023. So lending segment will be 95 to 92 to 95%. GAAP net income 95 105 million, adjusted EBITDA approaching 600 million, EPS 7 to 8 cents, 300 to 500 creation tangible book value. Guys, come on. They are going to raise every single quarter. They're sandbagging that EPS like crazy. Like I said, if they just make one, two, three, four, guys, that's 10 cents. That's going to blow away analysts' estimates. But I honestly think, Roy was right. I've started hashtag Roy was right. And, this is kind of my it was when I was watching their Q4 predictions, I was like, I was kind of looking for like, who's the bull here? Who's the bull here? And it turns out it was Roy. It turns out Roy is the smartest man in the room, and also Steve Areno. Of course, we're gonna get to Steve whenever Steve's a man of few words. I I don't really know if that's true. But basically, he writes articles at Seeking Alpha about SoFi. He doesn't put them out like constantly, like garbage, like Chia Pet. Re-rates or five head re-rates or whatever it might be like. So he has a new article. We're going to touch on that, but I just also wanted to note, guys, my sources say institutional ownership. This number was just, I think, at 37. Now it's 39.38. And you see the institutions that are coming in, and you see this number is pushing up, and it's like the highest it's been since December 2022. So that's a good sign. Obviously, we need to see 50%, then 60% institutional ownership, but Vanguard is a massive SoFi shareholder. As of the last filing, had 68 million shares, or 7.36% percent of the company. But what else did I want to touch upon? Yeah, let's see. I don't even really want to go over this, just the bearish article, but I think again, Goldman, I think is kind of a FUD spreader. Kind of, I don't know. Goldman is probably bitter. I guess they just let their CEO go, that DJ guy, that bald raver, the catch-all wonder. Um, but I think they just let that turd go. But Goldman, they're still printing money because they're entrenched in a lot of this institutional business. But let's face it, Marcus was a big turd. I'd rather have the prophet Marcus Lemonsis than Marcus, their consumer banking division. At least he has people, process, and product, motherfuckers. But Mike Ing, I mean, I don't know. I don't know. His last name is NG. Doesn't stand for like no good or something like that. But I mean, he's coming in at 8. This is another guy. He looks like he should be in a, Target ad for tube socks or something like that, and waving to a family while he, buys a Kia Rio. Looks like somebody who should be living at a fucking Days Inn or a Residence Inn by Marriott or some shit. Reginald Smith, I'm not really sure what this guy's all about. Again, his hairline is very strange to me. I just have no idea what's going on with these people. Touchdown Terry Ma from Barclays. He still doesn't even have a photo up. You have the bologna sandwich coming in at 4. The Chia Pet reiterated his call at 3, of course. John Hecht, $15. I know these, a lot of you guys tell me, why pay any attention to the analysts? Believe it or not, like these guys can make the market move in the short term in an outsized manner. You know, the parrot Michael Perito, the hairline, the bowling ball head, the shovel chin. This dude, I mean, he came out January 2nd. He came out of his holiday. He spent his New Year's Eve and his New Year's Day writing up a negative call on SoFi. Just it was like, what are you doing for New Year's? Like, yeah, we're gonna go, we're gonna celebrate, we're gonna drink some champagne. It's like, I'm gonna fucking trash SoFi. I mean, it's just strange. Like the timing of it was strange, and then the whole media, the whole market was loaded to just absolutely dump the stock. And I told you, why is that so important? It's because it's not like analysts in the market will just say, "Oh, the stock after this earnings report should be trading at around, $11. So the stock price will naturally fluctuate to $11." It's that the market was willing to accept a 20% pop based on this sort of seminal, one-time, very important event for SoFi. And the way they were able to frame this is it's going to be 20% from 750 rather than 20% from 10. And so the market only ran to 9. Shorts didn't panic, didn't get hurt that bad. In fact, we've had a massive resharp. And I know you guys wouldn't believe that, but this isn't even counting today's shares. Up to 153 million shares on loan, and this was just sitting at 84 million less than a month ago. So very strange behavior by me, Noodle Swag, or the stock itself. Good morning from Spain. What happened? Victor Hernandez. Nothing happened. The company's doing very well. Mechanics still control the stock. There's still not enough institutions. We need a minimum. Talking to Dr. B. Dr. B is the authority on TA. Um, And I'm not talking about no, so he's talking about, hey, we need to get 50% before we get to 60%, but we really need to be at 60%. There's a reason institutional ownership stabilizes the stock price. It prevents shorts and ne'er-do-wells and scoundrels from messing around with the stock. They'll buy dips, they hold shares, they're not emotional, they have no emotions. People have emotions. That's why people always tend to lose money. People who pick individual stocks are going to get wrecked, bro. Individual stocks are going to get wrecked. Stupid. Stupid. You're weak. You're emotional. You trade in and out. And that's all true. You're going to get wrecked. You're going to get wrecked, bro. You are going to get wrecked because you're stupid and you're weak. Welcome and hello, Victor Hernandez. It's Un Poco Moss, guys. Again, just trying to get myself to sleep, doing a little self therapy session on SOFI stock. I'm very glad you could join me. Welcome and hello. Hello and welcome. Let me just reiterate that, guys. Max Payne is still sitting right about $8. That's why I don't. Everybody's saying, "Oh, it's going to drive down to 6, and then if it really fills that mini gap, it'll go below 6." I'm like, you know, options are not telling us that. They'd be pushing that direction. They're always trying to make money off options. So if we're there, if the market makers were going to push it way down, options wouldn't look like this, and Max Payne wouldn't be at 8, and the volume on puts wouldn't be so low. Um, if you look at the cash basis, these differences, it's actually closer to 750 than it is to 8. But you can look, there's a bunch of different websites that calculate maximum pain. Some of it don't calculate between the 8 and 8, 750 and 50-cent increments. Some of them actually calculate it out to the penny, even though options don't work exactly that way. It's instructive because, of course, you can, straddle between several different strikes and, effectively blend that to get to whatever price you want. If you wanted to write an option, at 770 or something, some of you, science nerds could take an abacus or a slide rule and go ahead and figure that out for me. Like the King of Queens guy in the proposal. It's like, what do you guys got that makes this unique? It's like, aren't you Queen Latifah? Like, yes, I am. It's like, we've got this guy. You know, it's like the King of Queens. Like, what the fuck is this movie? How much makeup are you wearing, Vince Vaughn? Like, what's going on here? Anyway, guys, that's neither here nor there. Welcome and hello. I'm not sure if anyone is watching this turd, but it's really hard to say this week. Obviously, they're going to kill options. They're going to probably try to push down and kill everything at 8, kill all the calls at 8 as much as possible. Whether they're going to go ahead and try to push lower than that, I sort of have my doubts because borrowing is getting just a little bit out of control, in my opinion. But I just I just think you have to look at who has the credibility and what incentive would management have to tell you that tech is going to grow at that rate as an investor and then leave you sorely disappointed. I mean, think about it from management's perspective. SoFi sells off no matter how good their earnings are, or what kind of results they turn in, or what kind of growth they turn in, or what they do, or new products they introduce. I mean, I was taking a look at sorry guys, this live stream is kind of all over the place. Like what else is new, right? Um, but I was taking a look at the borrowing, and then on Monday they borrowed net of 18 million shares, and then all during trading, this was up all the way 9 million shares, and then after hours they returned a ton of shares right there. That drop is a difference of 14 million shares. And then so it was basically supposedly neutral coming into pre-market in terms of what they did Tuesday. Now, in terms of the short volumes, what they did when what they did when on Monday when they churned 285 million shares was just astonishing. I mean, so total aggregate volume is 141 million, and then aggregate short volume 48 million shares traded. And then you could see that spike also reflected in the borrowing on Ortex. So I can't figure out exact numbers on this, but you can certainly look at the trends and compare them day by day. I mean, this was extremely heavy borrowing and shorting coming in the ER, trying to basically hold the stock price down. This was spiked up from 11 to 13 to 18, then 48 million, and then 20 million Tuesday. And I believe that was on 115 million shares churned. So somebody was asking me, given the short interest, like, I think people don't really understand like what happens during a short squeeze and how market makers sort of prevent us the stock from winning to avoid a short squeeze. But somebody kept saying like, well, it had to short squeeze because it traded 285 million shares. I'm like, it's not trading those shares, guys. I don't think people understand how like high frequency trading works. And, they basically fix the bid and the ask and trade these blocks of stock. So they're trading so many shares back and forth and fixing the price that any orders that come in that would affect the supply and demand and therefore the share price are just swallowed up by this juggernaut. I mean, it's like imagine, your little order is like a dandelion and the market makers churning HFT is like a fucking tornado coming down and just ripping apart your fucking trailer park where you finance your Peloton bike on a firm, you stupid weak-kneed motherfucker. Um, so I don't know why I got so angry at you just then. I apologize. What was I talking about? So yeah, the dandelion, your order is a dandelion swept up in that tornado. Nobody notices your dandelion. It's just spit out the other side. Your little $1,000 order, your little penny any fractional share, 2-bit bullshit. Your little Lester Diamond Country Club golf hustler, no good James Woods looking leisure suit mustache motherfucker right here, guys. I don't know why. Again, I don't know why I get so angry at you guys sometimes. Just, you're turds and you deserve it. But anyway, I don't know. Like, there's just been extremely heavy borrowing the last couple days. So 150 uh 3 million shares borrowed is like, over 15% of the entire share count. And you know, I am hearing institutional ownership right now should be 43, 44%, and it is inching up every single day. That's what some people in the know are telling me. I can't document that specifically, but I'm seeing it trend that direction, and it always seems to catch up just a little bit. I don't know exactly what the requirements are for filing, buys, but it seems like it kind of doesn't come in instantly and it's aggregated over time slightly. But you're seeing anecdotally, hedge funds and different funds just buying into the stock. And I think that's really going to accelerate. And I think that's perhaps why they're attacking it, holding it down here. Again, not necessarily the same people that cover, but because certain institutions want to accumulate at lower prices and want to get the swing traders off the stock, want to certainly get the day traders off the stock and shake out what, paper-handed, weak-kneed, tiny wing longs that they can along the way, just for fun and profit and sport, and just to see if they can do it. Um, I don't know if anybody is watching this turd, but again, I am just kind of going over a few things, mainly for my own benefit. But I mean, guys, come on, look at this chart. Like, this isn't just, oh, we're just selling off at open or like swing traders. This is algorithm pushing this thing down at a specific angle all the doo-dah day. It's a do. Is that a don't? No, it's a do. Um, Look at this order here at the end of the day. I mean, there was a lot of shares being churned. I gotta believe they're accumulating because they're not covering. So, what is the point of this? Just push down the stock after a great ER? I mean, does anybody believe this stock? Like, when somebody like the Chia Pet comes out and reiterates $3 and his rationale is what it is, does anybody believe the stock is worth 1x this year's sales? I mean, come on. And what it was important, and Steve noted, and several other people have noted, what was important is that management came out and actually guided for 2026, 55 to 80 cents of net profit. So that gives you a multiple of like 11 to 16. So that's very, very reasonable. That's only 2026. And their management's basically saying they're not just going to grow 25% to that point, that they believe they can continue to grow at 25% thereafter. And there's so many opportunities for them to be able to do that. I mean, it was just kind of extraordinary if you look at, if you look at this little timeline. um, and this isn't it, but SoFi awarded banking, SoFi checking and savings turns one, SoFi money offers 2 million FDIC insurance. I'm sure many of us remember these headlines. We thought the stock was going to pop. Of course, it never did. Fast Company's most innovative companies. April, SoFi acquires Wyndham Capital Mortgage. I think that's going to be proved to be more important to the bottom line of the company than people think. And if people trust you with their home loan, and people trust you with direct deposit, the sticky direct deposits, the sticky icky, um, they're going to be able to retain a profitable, important customers. So SoFi at Work launched a student loan verification service in June, and that is important to this new program they just have with SoFi, with Chipotle and all that stuff because the verification is what you need for these employers to start matching the funds. SoFi launches Face of Finance. July, SoFi Invest offers Oddity IPO. And guys, this is just kind of anecdotally. They show the Taylor Swift and Beyonce in August. If you look at the big growth in Q3, you see the IPOs. SoFi offers ARM and CART IPOs in September. That's obviously Q3, July, August, September. Um, and then they don't have any IPOs, at least I don't see them on this timeline in Q4. But so three IPOs coming through there, the stadium rocking, that might have been more important in some ways in terms of publicity than even football. Like obviously Taylor Swift is a psyop. She's a cyborg. She's a Tesla bot, blah, blah, blah. She's not just some, you know, girl who sings. But everything has to be something it's not, and everybody has to make stuff up. So double my position and we go under six. Yeah, I probably wouldn't double my position because I was buying lower than that, but I would certainly buy heavily. I'm thinking about buying if it goes just any lower here. When they did that SoFi Circle Pit and didn't invite you, they had to say, "Oh yeah, no, dude, I don't, yeah, I don't give a flying fuck, man. Fine. Like, it's fun. It's fun for me to talk about SoFi. It's fun for me to talk about stocks, but you know, whatever. It's not a big. I can talk to the dog if I have to. Doesn't really matter to me. Um, what would make SoFi go parabolic? That's a great question. Obviously, 2 cents didn't do the trick. I think getting some big contracts they could actually announce in terms of a major financial institution, or if they were able to partner with somebody who's, say, a very, very blue chip company for payments, whether that would be like one of the, something more meaningful than like just at work, obviously landing like a mega bank, you know whether that would be like Wells Fargo or something to actually run the backbone, something that, contract that might go on for decades, and evolve and grow. I don't know. I don't know if there's anything right now that's going to make the stock go parabolic because it's just not that kind of stock. Like they're not looking for a cure for cancer. They're not looking for flubber. They're not like an EV company that's going to release that revolutionary, low $20,000 EV that's going to change the world. This is not what this is, guys. This is just meat and potatoes. I mean, yes, the tech is key, and management is telling you tech is going to grow, and everything I know says you should trust management. Ipso facto, um, you know, they should get that hybrid valuation because tech is going to become an important part of the company. But this is like more backbone tech. This is more software as a service. This isn't like, some type of a high flyer like a CrowdStrike, like a Palantir. I personally look at our margins and the margins they're going for, and anything I think like those companies can realistically hit. I mean, yes, CrowdStrike makes money, but I mean, SoFi has way better margins right now than Palantir and far superior growth. And SoFi gets traded like the redheaded stepchild of the stock market. It's the Rodney Dangerfield of the markets. Absolutely no respect. I mean, You have these analysts from major houses coming out with a straight face saying this stock that's growing at this rate and that's becoming more and more profitable by the minute should be valued, at 1x this year's sales or 1 at 1.5x this year's sales. That's not how you look at growth stock of this magnitude, of this performance. These guys know better than that. It's completely disingenuous in my opinion. And if you think like people at, you know, Jeffries or Bank of America or any of these companies that are like 10 and 15, if you think they honestly do math and they just arrive at the fact that they think the company's worth $3 or $4 a share, I don't see the math and they never show the math. And it's like they put in these models, oh, the company is going to lose 1 cent in Q4 and it's going to break even Q. It's like they already made 2 cents in Q4. Like your shit's already blown up like right from the start. From the jump, you're suspect. Like from the jump, it doesn't make any sense. None of this crap makes any sense. So what's the narrative? What's the point? Are they accumulating? Are they going to try to actually push it back down below 8, back into the channel and just keep trading it sideways? Despite what management's telling you, how much do they want? How many ERs do they want? What's it going to take to bring in the institutions? Because that's what's going to stabilize the price of the stock. Guys, let me give you another glance at the tile here. Are you surprised at the lower student loan? And yeah, I mean, I was surprised they took their foot off the gas as much as they did in terms of all the growth. Particularly, yeah, student. I wasn't super surprised in home loans but student loans, yes, I was surprised that number was as low as it was. Citizen 86. No, it isn't. I mean, it is. I think certain, but look at it. Min M66, that's what's going on here. I mean, look at the chart, man. Like, how do you think they're doing that? High frequency, whatever you want to call it. I mean, they're churning almost 300 million shares. It's not retails. Most retails just sitting on their shares through the ER. Most retails not even making a move. I mean, who's trading those shares? Why is that happening? I mean, it's like 30% of the entire float. Nobody's trading like that. This is institutions aren't accumulating like that. They're not dumping like that. It's all very strange. Like SoFi is a toy thing for the market makers. It's like, cat playing with yarn. They do all kinds of things. Um, yeah, I mean, I talk to people who know this stuff, who do this for a living, and who kind of highly placed in, they know stuff. And there's there is a Wedbush analyst that honestly, every time he speaks, $3 sell dumps. Um, Listen, guys, these analysts get amplified in the financial media, and they have an incredible power to move the stock over the short term. Yeah, parabolic move would kill all the shorts, but I mean, sort of like some type of a buyout offer, some type of a major partnership with somebody, like a Tesla or an Apple or some like huge name. I just don't see, this company's very steady. It should be at a higher level and it should be going up, but I don't see it, making the parabolic move. There's not a huge short. It's nothing like a firm or some of these other companies. What was the car company that I made a video about and I was just totally wrong? I don't think it was Carvana. It's not going to short squeeze like those stocks. I mean, 14% short interest is not, anything where you're going to see that dramatic of a squeeze. I would just like to see, the stock come up to like the fair value. People are like, well, it's a three to like if you read like watched Tanner's video and I personally read the Morningstar report, not maybe not the latest one, but I read a couple of them. They tend to be very conservative, very data driven themselves, with due deference to Chris. And they're putting the fair value on the stock. I think last one I they had raised it from 14 to 15. And these are folks that can analyze, like, what is this company going to be in the future? And the market cap right now, to me, is just far too low. And people are starting to argue, oh, it's a little overheated, it's a little overvalued. The old, rosy cheeks chipmunk, Dominic Gabriel. Sell puts. Yeah, a lot of people are selling puts. Parabolic, yeah, I mean exactly. We don't want parabolic moves. You don't want I know people, of course, who doesn't want a parabolic move? It sounds kind of stupid to say, but honest to God, you really don't. So let me just take a look at Steven Fiorio. Of course, you probably know him if you watch SoFi Weekly or any of those shows with fundamentals of investing, future investing. The other gentleman over there, Roy, and now Chris, and of course Tanner. The sort of the center, the center spoke, the center square. Um, yeah, I mean, okay, if that's what you mean by parabolic move to 10, yeah, that can happen at any point. I think you could get that from just some real serious institutional buying. I mean, that's all that would take. That's just stabilizing the price of the stock. I mean, the stock wanted to go up past $10 already, and they've just been shorting, borrowing, dumping, doing their thing. Obviously, I think this stock could be quite a bit higher, given the growth. It could have quite a bit higher multiples, particularly given the guidance management's giving you on the tech side. Could very fairly and reasonably have a much higher multiple. I mean, I'm not saying it's going to get a CrowdStrike multiple. I'm not saying it's going to get a Palantir multiple, but why shouldn't it get an Affirm multiple? I mean, oh, they have a partnership with Amazon. Oh, 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 that's what is that? A license to print money? Fucking that, and I was gonna say 75 cents, but these days fucking Starbucks, that $4.25 will get you a cup of coffee. I'm telling you, Amazon will fucking bleed them dry. You think Jeff Bezos is giving money away to people? Think he cares about a firm and the Affirm shareholder? Dude, that guy's flying around in a fucking helicopters in a 900-foot sailing yacht with Lauren Sanchez. Excuse me, sweetie. I'm trying to launch my rocket here with Blue Origin. He's like, yeah, we're going to sucker practice. It's like, okay, okay, sweetheart, okay, okay. Just trying to launch my rocket. Like, I don't know what's going on in that house, but they're running around cat suits and yachts and fucking rockets. Just silly. It's just silly. Um, More self tanner in a little bit, guys. I know, yeah, Noto, they definitely want to get the stock. I think they have to get it up to $45 to cash out all their shares. And I feel like they're targeting. I think that's why he's talking about 2026. I mean, if they could pump the stock to $45 in 2026, these fucking guys, they're gonna make so much fucking money. It's gonna make the devil himself blush. But anyway, let's go through. I just want to go through a couple of these articles on Seeking Alpha because it kind of builds the bear case and goes over the ER better than I can and puts it in somewhat of context. But yeah, the bonuses, I mean, it aligns management with our interest, but it also aligns management to do things on certain timetables that might be in their own interest. And, if you think like Anthony Noto has some specific allegiance to you, or he's your friend, or he's looking out for you, you're a babe in the woods, and you shouldn't be doing this. Um, Nobody fucking cares about you. Anthony Noto does not care about you. Yes, I mean, I think he's, an honest guy in terms of a CEO. That's not my point, but he's trying to make money for himself, for the board, for the fucking powers that be. Don't let that fucking windbreaker fool you. Like, this guy has a huge net worth and he does not care about you, Joe Six Pack, knuckle dragging sack of shits. Okay? That's just the way it is. Yeah, he's a vet. He's a good dude. I'm not saying he's not, but he's a capitalist. He's an executive. He wants to make himself as much money as possible. That's why he's in this job. It's not, it's not a charity thing. It's not to like build some, fancy little community. It's not to afford more, Grecian formula or just for men. It's nothing like that. Anyway, on to Stephen's article. And Stephen is always the smartest man in the room, and he is also a sexy Fred Flintstone. So that's all I got to say about that, Jenny. Um, what's going on, guys? Yeah, I like Stephen. I like his glasses. I like his, that he just, doesn't give a shit about those young dudes kind of hanging out, doing his thing. It's kind of above it all. Um, anyway, yeah. Plus he's funny. I just like Steve, but he's probably forgotten more about this stuff than I'll ever know. So anyway, so let's go over the article very quickly. If you guys want to bail out and go to sleep, I'd encourage you to do that if you have that capability. So SoFi's strong financial performance, multi-year guidance, expansion into asset management, business banking, technology position it as a top 10 financial institution with certain growth potential. Okay, it's morning. Good morning, Victor Hernandez. Welcome and hello to any of you new turds that are watching. Willie Faison. I believe Noto and the crew. Yep, I think so. Let's see. What's up, Paven? How you doing? What's up, Victor? Stuff to watch. I'm surprised Noto didn't buy more shares. I guess Kathy Wood bought shares. That's what the stock goat was saying. And that does bode well because I think Kathy Wood is got getting very attuned to entry points and buying dips and selling tops and being a little bit more intelligent, not just assuming that disruption is like a magical fairy, sprinkling methamphetamines around on magic beanstalks and you go up and fight giants. That's not how things work. This is the real world. You have to buy stocks at the appropriate price at the appropriate time. And if you're Kathy Wood, Aunt Kathy says now is that time. The time is now. What's going on, guys? Yeah, it always tanks. I mean, you're right. So we're fucked, man. Thanks a lot. You real downer. Oh, fucking buzzkill, man. Dark Master, what's up? LOL. LOL. Isn't that funny? LOL. No, it's not. Okay. Listen, fuck sticks. I gotta get through this article. I can't keep reading. Yeah, but come on. She's always palling around with Elon. Elon, yeah, come on. Tesla could be a lot further along. It's a great company. I'm a Tesla investor. I do like Elon. He's an incredible innovator and all that bullshit. But if he was just trying to create shareholder value for Tesla and for himself, if that was his goal, Tesla could be a lot further along on things that are making money and a lot less time, buying windows for his compound in fucking Texas or whatever, you know. So it's been a tough road for SoFi. It goes through a lot of the background, challenges they face, blah, 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 following up on his previous article. So just basically breaking down all the numbers. Inflection point is upon us. SoFi's delivered. They added 585 members. Overall, 44% increase year on year to 7.54 million. The deposit growth, again, very, very strong. So they didn't bring in nearly as many members as Q3, but still grew deposits more than Q3. And they also grew deposits more than their loan originations. This is the key. And this is why I really like Steve because the guy does his homework, like Doogie Howser. So I tracked 25 largest financial institutions, and 13 banks witnessed their deposits decline. Of the 12 banks' deposits increased, only four grew by 20% or by 10%. Of these banks, SoFi was the only one that has grown their deposits by triple-digit percentage, as the 11.3 billion of new deposits represents 153.61 year-over-year deposit growth. Again, this is a little bit deceptive because, of course, they've only been a bank for a couple of years, so they're starting from zero. All these other banks, they're starting from wherever they are. So that's just, neither here nor there, but it's obviously true. So even with the regional banking crisis, JP Morgan was the only large money center that grew deposits year on year from the big four. SoFi is proving that banking doesn't need to be traditional and it can transcend what the image of banking has been. It's no longer a question of who would utilize SoFi for their financial needs rather than who will migrate from traditional financial institutions to SoFi and how much of the younger generation will choose SoFi as their first bank rather than going with a traditional brick and mortar institution. And there you can study in this article and see all the growth of the banks that Steve tracks. And I always tend to do that because it's actually very interesting. And there are some other banks, not just SoFi, that are also, I think, undervalued. And we get into that if we ever have time. But God knows I'm under time pressure here, folks. The producers, they're telling me there's not an endless supply of videotape in the world. Where I do this whole show on VHS, play it back on a Tandy. This was a blowout quarter for SoFi, delivering 594 million in adjusted net revenue, representing 34% year-on-year growth. SoFi was able to drive 181 million adjusted EBITDA at a 30% margin. The biggest question was answered in Q4 as SoFi generated GAAP profitability. Um, Generated 2.07 just net revenue, 35% increase. We've been over all that. So in addition to the question about profitability, this is key. Another one answered was regarding loans. Q4 SoFi sold roughly 875 million personal loans and 350 million in home loan principal. The personal loans remaining on the books were marked at 104.9%. This is where people kind of smelled shenanigans. I don't know. I don't know enough about marking loans, but I know SoFi's been pretty honest about and transparent about this process. They have an outside company doing all the metrics they use, try to account for everything, yada yada yada. Which in maybe with interest rates coming down, these loans at the higher rates will be worth more, but they should default more. So I don't really know. Which increased by 0.9% from the close of Q3. Some had speculated in the past SoFi wasn't selling loans because there wasn't a market for them, which once again turned out to be incorrect. I love how Steve doesn't equivocate. It's like, you were wrong. You were wrong, dude. Sorry. Sorry, bro. You're wrong. You're fucking idiot. I was used the wrong term. Sorry. Management has always said they would do what's in the best interest to drive value for the company and shareholders when it comes to selling or holding loans. SoFi sold part of their personal and home loans because it was an opportunity to drive value. In the student loan segment, SoFi had entered a credit default swap in the amount of 2.5 billion. SoFi has reclassified this block of loans as held for investment as they will be held to maturity due to management seeing an opportunity to generate larger returns. Then where the price for in for sale market trending today, the reclassification of loans doesn't affect blah blah blah. So SoFi issued strong, and people are concerned student loans didn't get the originations people were expecting in Q4. Yeah, I was a little bit surprised they came down from Q3 as much as they did, but you have a lot of uncertainty regarding interest rates, a lot of uncertainty with student loan forgiveness. A lot of people aren't really ready to start paying, so I don't know. We'll have to see if that trend picks up again or continues to be flat or decline as we get into 2024. SoFi has issued strong fiscal 2024 guidance. More important was, the multi-year guidance. SoFi is expecting, and we all, we went over, it's going to generate 95 to 105 net income. I think they're just the 7 to 8 cents total sandbag. It's going to be closer to 20 cents myself. Well, confirming full year of net income and positive EPS was what we were hoping for. Mr. Noto went a step further and sent a clear message to the market. He discussed where management sees SoFi profitability through 2026. Based on the current outlook, management sees SoFi growing revenue at 20 to 25% compound annual growth rate, which will push its GAAP EPS to 55 to 80 cents per share in 2026. If this materializes, SoFi will be trading at 11.45 to 16.65 times 2026 earnings based on current share price. No, come on, guys. I mean, 2026 is not that far away. This is a growth stock. Like, oh, its EPS is 130. It sucks. Like, this thing just hit profitability. What do you guys? You guys just wake up, just fall off a fucking turnip truck and hit your head on a stupid tree? That's not how it works. The first fucking year they're profitable, it's just going to be a small profit. They're transitioning from losing money to making money. That's how it works. It's a continuum. It's not like, some kind of evolutionary event where you have some, I forget what they call that, where there's like a shock and there's like rapid evolution I forget. God, my fucking college was from the Stone Age, Paleo, Paleolithic era, I believe, is when I went to university. Back when I went, we called it university. Did you go to university? Like, of course not. What the fucking going on? Mr. Noto also discussed that management feels there will be continued growth in the core business beyond 2026, which could amount to 20-25% in EPS growth. Now that SoFi is officially profitable, the stigma of being an unprofitable SPAC is null and void, especially with their 20. So basically, and this is this, Steve is going through the same, set of facts that Noto went through, which just completely debunks the bear case. The things is Chia Pet, the five head, the bowling ball, things these guys are talking about. Again, they're focusing on, macro trends. It's like, okay, if SoFi's defaults are going up, everyone's defaults are going up because SoFi has very well qualified buyers. But SoFi also has some weakness. They also have some extended some credit to less than ideal borrowers. So we have to keep our eye. They have high defaults. We have to keep our eye on the weaknesses. Um, yeah, most traders do lose money, Paven. Yeah, I'm not a trader. I just trade if something goes nuts. Like it's not something I plan and go, oh, I'm going to swing trade this over. My plan is always to buy something for years. But sometimes it turns into a trade. And that's sometimes that's not true of penny stocks, but that's these things are very tiny percentages of my portfolio. Anything I'm trading over a short period. Have a good night, Min M66. Thanks for joining. I really appreciate it. Um, Thank you very much. Do not like or subscribe. Your computer will get a virus. Your phone will blow up and will give you some type of horrible testicular disease from your front pocket. It's like Butters said, I got something in my front pocket for you. I'll sell you a course, Paven. I'll take you out back and slap you around, kick you in the nuts. You give me 40 bucks, buy me some sushi, call it a day. Give you school of hard knocks, a la Danny Deals. Hey man, I learned a lot bouncing. That's people who don't want to listen, people who are stupid, people who are doing stupid stuff. You punch them in the face real hard. All of a sudden they're all ears. Like, "Oh, sure, time to go. Absolutely." No, I didn't just punch people randomly, but the point is, guys, some people you don't understand something till you're hit over the head with a fucking 2x4 a la hacksaw Jim Duggan. And why did Hacksaw make his thumbs up gesture so strangely? He made a thumbs up gesture like in some weird inbred manner. I don't know. There's something real funny going on there. Um, what's up, Paven? Can you please fill us in on T14s? I don't know. What do you mean? Tito's not a friend of mine. We don't talk anymore. No, I think he lives in Huntington Beach. I have no idea. What happened? Something oh, he's the mayor of Huntington Beach? For real? I don't know, guys. I don't follow Huntington Beach politics. I'm not on the coast. I'm not in the OC. I'm not that cool. I'm not Spencer and Heidi and LC. Not in that group. And then those like weird ancillary characters like Low. Like you don't even know. Is she featured? Is Low even being paid? No, she just hangs out here. I think she's my housekeeper's daughter. Now that SoFi is officially profitable, the stigma of being unprofitable. We already read all this. I'm kind of bored with Steve, but it's a great article. Highly encourage you to read it. But just goes over all the numbers, goes over the guidance. This is the same thing I was just showing you from SoFi's slide. Many opportunities on the horizon to drive growth, and this is where I think this really gets into it. SoFi just announced they have more mutual funds, pre-IPO companies. They're going to be doing more IPOs. They're getting into PE type of stuff with ARK and with some other company. They're also growing the SoFi at work. I know they're talking to the feds about getting into business banking, business lending. No management's already talked about that at one of these conferences. I think that's obviously one of the reasons they gave up the crypto business because their bank charter, they want to expand the services they offer under their bank charter. And the feds just don't like, especially after the SBF Sam Bankman feed, especially after that fiasco where he let, just lost a lot of people money while he was playing, World of Warcraft or whatever. I don't know. But yeah, they just don't like to see that crypto in there. So SoFi jettisoned that business. Um, So they're also going to do really well with retirement, all these matching plans, SoFi at work, benefits. SoFi also launched an expense management solution partnership with MasterCard, provides clients B2B sector insight into spending on corporate cards. Actually, this is big business, guys. Corporate cards, payments, expenses. It's not too exciting, but it could generate revenues, year after year after year. It shows SoFi's dedication to the B2B sectors. Galileo accounts are back to growth mode with 145 million accounts powered by SoFi. SoFi is also looking to bring business checking, savings, lending, small and medium-sized companies, allowing them to offer full 360-degree financial service for a large segment of corporate America. This opportunity is immense, as there are roughly 33.2 million small businesses across America. Nearly half of all U.S. employees are employed by small businesses. I think many individuals overlook how impactful entering into the business banking industry will be, as it can open up many synergies where SoFi would become a business partner for banking, lending, etc. Galileo counts again. Management's very bullish on Galileo. I'm very bullish on Galileo. Steve is very bullish on Galileo. I think the SoFi community in general is very bullish on Galileo. Wouldn't even mind Lapointe. Yeah, Chris Lapointe is excellent. I completely agree. Um, no problem. Like I said, I think Noto has about a 5 more year window on this thing. I think before the end of the decade, he had exits stage left and buys an island somewhere. Um, or we go up fully field and have a catch. Me and Tony Notes, my biological father. But this is interesting. Goes over in addition to conducting an RFP, implementation takes time, which expands over quarters, not months. Financial institutions will need to transition to modern processing on cloud native cores, and SoFi is in a position to generate recurring revenue from its competitors. This approach won't just make SoFi more efficient and reduce expenses, it will drive ongoing revenue and position SoFi to command a tech or hybrid financial tech valuation potentially. And then he goes into risks. We don't know what the risk, the job market, artificial intelligence, and these are just overall risks, the macro, the economy, the sector. Um, SoFi could find themselves on the other side if deposits start leaving the platform. So um, it's not a sure thing, but management has done an excellent job. In conclusion, of all the companies I am invested in, I believe SoFi has the potential to generate the largest percentage returns over the next 5 to 10 years. And this is key. Just because he's bullish on SoFi doesn't mean he's correct. He's very knowledgeable, but he's wrong sometimes, and his thesis can be wrong, as can mine. Mine probably is more often than not, certainly more often than Steve. But so please do your own due diligence if you're interested in investing in SoFi. And he has a very long time horizon. So he has time to let these play out. You guys have to be honest with yourself. If you're looking for this for a short pop, market makers can bend you over a barrel and show you the 50 states. This is not a short term stock. Yes, they're playing it. Yes, they're trading. You make money on options. God bless. But if you're just along and you're just expecting this to just go up all of a sudden, all at once, it may not do that, guys. You need a long time horizon on this thing. So if Mr. Noto is correct, then SoFi is trading at a 2026 forward P range of 11.45 to 16, which is cheap in my opinion, especially since he sees 20 to 25% EPS growth post 2026 as all their business ventures come together. I think the biggest differentiator is a tech platform, which ultimately provides SoFi with that hybrid valuation. There's a lot to be excited about. I believe there's a lot of value to be unlocked over the next several years in the shares of SoFi. I completely agree with Steve. Um, you go on to I don't know if anybody's still here. I don't know if anybody's watching. So I got to get off this live stream. I actually have to go to bed. But this is another good article I was reading. Oh no, this is the transcript, and actually this is pretty good. I would actually read this. I would. It might be better to listen to it if you can catch the replay. But Noto basically talks about when he talks about tech. That's the part I really paid attention to, probably more than anything. It's basically, listen to this part. We start to see evidence of this strategy in the fourth quarter as growth was driven not just by continued strong organic growth with existing partners and new product adoption by them, but also notable contributions from increasingly diversified clients, which have launched within the last 6 months. Guys, the strategy is starting to work. They did a reset on Galileo. The FUD there, from the Chia Pet, the five head, this was one of the laziest. This thing kind of like crashed the stock. I forget what this bozos. Oh God, this guy, I forget this Bullam tumbleweed. This Gary J. Gordon, who's like a retired, stock guy, some very bright. He wrote one of the laziest hit pieces on SoFi, the strong sell hit piece on January 16th. Um, this is one of the laziest, stupidest articles ever. He goes to the tech platform. He's like, I don't understand anything about tech or about what SoFi does with tech. So I'm just going to put this quote, one paragraph for management, which is a very confusing paragraph, I think intentionally. He's like, that's all I have to say about that one, Jenny. But anyway, these other articles that are here, you can check them out, but this is another good one by Stone Fox Capital, January 30th. Market remains too negative. SoFi provided guidance, nearly 600 million adjusted EBITDA, 50% more growth. It trades at only 12x 2025 adjusted EBITDA targets, half the targeted growth rates that could be conservative. Heath Mark Holder, CPA with degrees in accounting and finance. This is another good article. The profit machine. SoFi has been very volatile, while the top line revenue growth has been remarkable considering the tough economic environment, limited demand for loans. The bigger boost came from the bottom line, reported EBITDA 181 doubled sequentially. The fintech reported increasing amounts of EBITDA over the last year, but the market mostly ignored this progress. The prime reason was the focus on gap profits. Guys, gap profits was something we just needed to tick off the box and just get that behind us. Doesn't mean we're going to be making a fortune in gap profits this year, but that's just one of those things the smart money, the institutions want to see before they buy in. So, again, my spies are telling me that people, institutions are buying SoFi, that institutional ownership is up to about 43% and increasing day by day. So we'll just have to see how that plays out in filings come out, who's buying the stock. Um, it's him been billion taking six. Yeah. Paven, you got a lot of ideas, which I do like. I'll have to go back and reread this, but I'm just trying to let me get through this article, and then I'm going to get the hell off this live stream because nothing good comes. Almost pre-market already. God, I gotta go to sleep. Outside of interest expense and income tax, so he's talking about why you should be looking at EBITDA and why it's really important for a company like this. And the primary adjustments are for amortization. I always mispronounce that charge and stock-based expense. Two charges combined for 20. Amortization charge has nothing to do with the ongoing business. Everything to do with writing off excessive purchase price of acquisitions. They took a big hit on in Q3 on Technesis. With SoFi now reporting profits, the company now has 1.03 billion diluted share counts and 9 billion market cap. Stock trimming 9 million following strong results. So the dilution is baked into that share count anyway. So the stock-based compensation shouldn't really be looked at as a separate deal because it's already basically baked in um, as the share count increases. You're going to feel that. The gap EPS target for the company is only 6 cents, which amounts to 60 million net income for the year. Remember, guys, they just made what 48 million. I don't know what it was adjusted. I got to go back and look, but it's like they're basically saying they're going to do far worse. Um, they're going to only make on average 1.5 cents a quarter for next year as they grow at a high rate and interest rates start to come down ostensibly, and they're going to do worse than they did in Q4 of 2023. So SoFi enters 2024 as a sudden profit machine. The company guided the following numbers, and we went over this already. Tangible book value growth. The big key is the target for adjusted EBITDA reached nearly 600 million, up in 2024. Um, Up from 432 million in 2023. SoFi continues to grow profits at a fast clip. New banking products launched in the last couple of years. So this is all kind of the same thing, guys. All these guys go over the same stuff. Contraction, company doesn't even guide strong segment. Company's guidance is so conservative, incredibly conservative. I don't know if it would be better to come out with more accurate guidance and smaller raises. I mean, I know that's their strategy and they're sticking to it. It's like, John Candy throwing change down. Look up women's skirts in the film Splash. Um, John Candy reference. Shout out to the Big T. Continuation uncertain capital markets, assuming four rate cuts, Fed funds rate reaching 4.5% by Q4 2024. So the lending segment, four rate cuts, and Noto said, that's very, very conservative. Um, so anyway, mentions figure stock. So this guy's very, very bullish and he's very smart. I've read his stuff. Assuming new 2025 adjusted EBITDA target of 750 million, the stock only trades 12x forward estimates. Back original target of 270 million. Guys, once going back to the original 2023 target is 270 million, absolutely destroying these numbers, absolutely destroying the promises they made as a SPAC when they were coming public. One of the very few SPACs to be exceeding those targets. Um, let's see. Fintech originally guided EBITDA numbers hitting roughly 1.5 billion for some of the this was like again, this was before their whole business was kind of pulled out from under them. In essence, the large gap in EBITDA numbers is likely to be closed over the next few years. All well investor can actually get the stock at $1 cheaper now than when the SPAC deal was first agreed to those financial targets. Long time hold until Noto leaves. I'll move my winnings dividend paying mutual fund with my Roth since his team has made the goal. Okay, I mean that's fair. Willie Faison is taking his money out with no, of course I'm Gil Faison. This is too much tuna. It's too much tuna. Um anyway, yeah, okay, that's cool. I mean, I don't know that I'd necessarily pull my money out of SoFi just because Noto leaves, but it's a fair strategy. I'm not mad at you. Stock market is always trading stocks. So takeaway, key investor takeaways, the market remains too negative with SoFi trading with a limited market cap in comparison to the corporate growth over the last few years of public company. Shocker, SoFi is undervalued. Even more amazing, SoFi appears far too negative with forecasts for GDP. So SoFi's tanking their own guidance so they can make these huge raises. They're not going to make 7 or 8 cents. They're going to make like 20 fucking cents. Come on, think about it. Think about it. Either way, SoFi Technology stock trades only 12x adjusted EBITDA profits 2025, considering fintech has consistently beat internal financial targets and the consistent strong growth rates. SoFi shouldn't trade at a multiple far below the likely conservative growth rates. SoFi's multiple is so low for a company with this much potential, growing this fast and already making money. There's the notion that this narrative that SoFi is so incredibly risky is just absolute nonsense. Did you guys see Noto on CNBC? Let's take a gander and then I'm going to close out of this turd. I have no idea how long I've been talking.
Percent right now. CEO Anthony Noto joins us. Anthony, thanks for being here. Big quarter for you all. Profitable one, record revenue across the three businesses. Solid profitable outlook as well. What are some of the key drivers that you think led to these results?
Well, Leslie, thank you for having me on. I'd say the strategy overall has really come into play and delivered exceptional results for the quarter. 6 years ago, we embarked on this very ambitious strategy to be a one-stop shop for all your financial services needs.
I don't think people realize how long this has been coming together and the level of execution this requires and how really, 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 really good management has been with SoFi. It's just amazing. Um, let me get done. Let me get done licking Noto's balls and get back to the interview.
When I joined the company in February of 2018, we were primarily just a lender in two products.
It's the Botox Paven. He's frozen.
Today, we offer not just four types of loans, including home loans, but we also offer SoFi Money, which is a modern checking and savings account, SoFi Invest, SoFi Credit Card, insurance products, and we also power 140 million accounts across the fintech industry through our technology platform that we outsource to our partners. This quarter really reflects the fact that the financial services segment is now profitable and growing quite meaningfully. The tech platform business is also profitable with accelerating growth. And that's really the drivers of growth going in 2024 and less of the lending pieces. So it was a combination of that strategy over the last 6 years being invested in and then
Helpful,
coming to
Kogan.
fruition in 2023 with
Can't believe
record
anybody's
revenue over
watching
$2
this
billion
turd.
and
Just Paven,
record EBITDA and actually hitting our
Paven and
long-term
Willie
EBITDA margins
hanging
at
tough.
30%. And as you mentioned, GAAP profitability for the first
I
time, which
admire
will
your
sustain in
chutzpah.
2024.
Yeah, and of course, this all comes against a macroeconomic backdrop that, for a lot of lenders, remains uncertain. And you have a pretty conservative outlook for 2024, baking in
Absurdly conservative outlook.
a 5% unemployment rate, four rate cuts, which is, of course, fewer than the market is pricing in. So, what are you seeing in terms of customer spending trends, portfolio quality, that is helping to inform your outlook for 2024?
Yeah, as you mentioned, we did take a very conservative view on the lending part of the business for 24. We are expecting 75% year-over-year revenue growth in our financial services segment and 20% year-over-year revenue growth in the tech platform, and really no growth in lending because of that conservative view that we're taking. We do expect credit to normalize. We're seeing those trends across the industry as well as at SoFi, and so we're taking a very cautious view there. In terms of underlying spending trends within SoFi Money, we had $1.6 billion of point of sale debit spending in the
This is a lot of people have been talking about this, how their debit card spending tripled, and that's just, I guess, you can explain by how rapidly banking services and deposits are expanding, but that's really, really good for SoFi. It's not only do they get fees, they get ton of data out of that about customer behavior, and that's really kind of the key going forward. And with all the stuff PayPal's talking about with like AI, data harvesting, SoFi is going to be capturing an absolute treasure trove of data as well.
quarter. That's annualized at about $6 billion. It's up 3x from a year ago. We're seeing strength within existing accounts, but we're also adding new accounts, so it could be a little bit misleading. In addition to that, we have been observers of the broader market dynamics. We've seen some levels of liquidity dry up in certain markets. In addition to that, the largest banks have seen an increase relative to 7 and 10-year highs in write-offs, delinquencies, and
Is Noto hypnotized? He's like memorizing this like some kind of terrified kid giving a speech at a career day or something. Looks shell shocked. Is Noto okay? Blink if you need more Botox, Anthony.
then the provisions for losses of one of the largest banks were up 50% sequentially. So we're really bullish about our financial services segment, which is growing quite well, 75% for next year, and tech platform, but conservative on the lending side.
Hey, Anthony, some of the macro stuff that got
Stuff to watch. I'm just jelly. He's a very handsome man. He's got a nice square jaw, great head of salt and pepper hair. Um, he's like Steve Garvey meets Ronald Reagan. I'm just jelly. I got a big man bun situation. But seriously, he looks a little frozen, looks a little deer in the headlights, a little Patty Hearst.
got commentary in the earnings last week was about real wage growth rising again after 2 years of shrinking.
This guy's getting a little chubby. He's probably had kids or, something. He's up all night. It's just not, I wanted to talk, but I just noticed this guy on CNBC is just getting a little bit chubby. Just point that out. It's really not going to help you in any way, shape, or form.
Is that starting to make itself felt within the metrics?
We're not actually seeing an impact on spending. We are obviously seeing a normalization of credit back to pre-COVID levels. So that's where it's showing up on the spending side. That is still strong, but the credit side across the industry as well as at SoFi is definitely normalizing, which is why we're taking a conservative view. The unique thing for SoFi is that in 24, 50% of our revenue will be from technology platform revenue and financial services, and 50% from lending. In previous years, it was as high as 80%. So we've gained scale and profitability in those two segments just in the right time as we entered 2024 and the concerns on the credit side.
Shares popping double.
Guys, listen to Noto. Listen to what he just said. He's like, everything is coming together at the perfect time. Tech and financial services are catching fire as we need to pull back on lending because of credit concerns. He's like, it's all working perfectly. Our model, our diversified business model, this is all coming together at just the right time for us. Dude, the FUD spreading Three Stooges and their minions and their, tiny wing turds in the media. They want to attack the stock again. They borrowed 18 million. They returned some overnight. It's going to be interesting to see what happens tomorrow. I guess we're going to see a lot of critical earnings and the Fed talking. Nobody's expecting a hike. Nobody's really expecting a cut at all. Everybody's kind of expecting a wait and see things to be held steady. Is that going to be a reason for SoFi to sell off? Is it going to be a reason for SoFi, people to buy SoFi? I don't really know. Again, the key is we need institutions to buy in, stabilize the stock, get the shorts and the traders off the stock, and get this thing trading like an actual long-term play versus just this, you know, yarn for the cats to bat around and make money off of stupid, weak-kneed retail investors. But guys, it's me, it's your buddy Danny Deals. It's Un Poco Mas, the show where we give you just a little bit more. We are talking SoFi stock. SoFi got obviously pretty much trounced yesterday, which would have been Tuesday the 30th. It just became the 31st, Wednesday, out here in beautiful dark Los Angeles. Um, but anyway, guys, 115 million shares traded off of 285 million on Monday. It's going to be very, very interesting to see what happens tomorrow, both in the broader market as well as with the SoFi stock. Obviously, NASDAQ futures not looking real swell right now. Came back a little bit. It was 135, 130. So just have to see what happens. They always really get super cautious, before the Fed talks. Russell futures are up, Dow futures are up, S&P flat, oil's flat. So guys, very hard to say what's going to happen tomorrow, rest of the week. Obviously, options are telling us they're going to be, down around that $8 level, possibly a little bit below, but that's not always been predictive. The stock, exceeded max pain to the upside quite a few times. Also, obviously, could exceed max pain to the downside. You just don't know. You have to wait and see how things go. But obviously I wouldn't be, even if it starts to go up and you see a pop, just don't buy these short-term calls, buy shares, buy leaps. You guys are too stupid. You're going to get caught. You're not going to time things right, and you're going to end up crying to your mammy. And we don't want that. It's just unseemly. And she doesn't want to hear it either. She's heard enough of your bullshit, whining Karen complaining over her life. She wants to get on and just get on without you. It's enough. It's enough already. Guys, thank you for watching. I really appreciate it. It's Un Poco Moss. I'm Danny Deals. I hope so, Willie. I hope so. No does know exactly what he's doing. You are completely right. Thanks, Paven. Appreciate all you guys' comments. Hope you guys have a great night. I will talk to you when? It's coffee. It's coffee talk. We'll talk. Hope it well. Peace. I'm out.